McDonald's receiving an upgrade from analysts at Northcoast Research, the Ohio-based research firm taking a positive stance on the burger giant's recent cost-cutting actions, saying that its recent restructuring will result in a streamlined business model that will help stores recover margins despite cost inflation. Joining us now to discuss, Northcoast restaurant research analyst Jim Sanderson. Jim, thanks for joining us first and foremost here. Help us go further into some of the research here and what you're anticipating, especially as we're kind of tracking McDonald's share price reaction even on this report.
Well, we're watching pretty closely the restructuring in place at McDonald's. There have been, headcount reduction announcements that are in process, but we really think what's coming out of that is a broader strategic restructuring where you're going to have an organization in the U.S. that is more streamlined, more centralized, and that's going to fit well with the new leadership that's coming on board. You've got a former Chipotle executive that will be joining McDonald's. I think she's just joined recently. She's got a great background in store development in the United States from Chipotle, and she also has that experience in looking at digital and technology applications to build the platform and to really improve the customer's accessibility to the brand. I think that's something that she will add to McDonald's, really leveraging a lot of the technology that McDonald's has developed. And they're in a stage now where they can grow. So I like the setup with respect to how the company is restructuring the strategy they've got in mind. So they've got a new team and new team structure developed, and now they're bringing on new leadership that is really adept at technology and technology applications. I think that's exactly what restaurants in the United States need. And with McDonald's being a leader, I think this is a great way for them to enhance and strengthen their leadership position in the restaurant industry here in the U.S., which is still their most important market, even though they are, they're globally operating.
Right. Jim, it's Julie here. When we talk about the tech companies cutting staff, we talk about how bloated they got, maybe they overestimated growth and hired too much. Is that what happened with McDonald's also?
I think you've seen the actual dollar overhead expenses creep up a little bit after 2019. I think what we're expecting out of this restructuring is hopefully they're going to go back to a more stable dollar budget, and that will result as, system sales grow, that will result in a lower percentage of revenue, let's say. So they're actually going to try to stabilize their budget for overhead and then focus on sales growth with a streamlined organization. So I don't necessarily want to say that they've gotten too fat per se, but I think that they are looking at what their business needs are currently and how they can adapt that and really get back to a position where you're starting to generate some leverage on that investment in overhead, not necessarily grow it to drive growth. And remember, McDonald's is coming off of an extensive multi-billion-dollar investment in their U.S. store system. They've remodeled a significant number of stores. They're coming to the end of that. And I think that there's going to be a shift in strategy that, again, may not require the level of investment that we've seen in the past.
With this type of restructuring, what do you believe the prioritization coming out of it is for McDonald's? I mean, we're talking about reductions in compensation packages, title changes, demotions in some cases. That's no doubt a hit to some of the internal sentiment. Have we ever seen even a correlation of a company's performance even after they roll out some of these structural changes?
Well, the cultural impact is something we want to be aware of and watch. So I think that's always a challenge in these transitions. When you do look historically, the last time there was a round of headcount reductions at McDonald's, again, you did see that nice stabilization of the dollar budget, and that allowed the sales to grow at a quicker pace than overhead expenditures, and that improved or strengthened the store margin rates, or the corporate margin. So I think that was very constructive from a shareholder perspective. Again, what I like about the process here is the strategy behind it. So I think you do have cases where McDonald's has successfully restructured their employee base and come out of it stronger, and we're hoping that will be exactly the same outcome this round too.
Jim, we always like to ask about buzzy products as well. And one of your colleagues at another bank was talking about the potential for the Chicken Big Mac, and that there was some interest in that. What can you tell us about that and how big of a catalyst maybe that will be for McDonald's?
Well, the chicken sandwich and the chicken category is an incredible opportunity for any quick serve restaurant. It's a key driver. It's one of the top reasons the consumer goes to a quick serve restaurant, even if it's a burger restaurant. we're in a context now where we've got significant beef inflation that we know is coming down the road. So I think shifting over to products that focus on chicken is smart. The cost of chicken, I think, will be far more reasonable than beef. We don't really anticipate that the inflationary pressures we expect in the beef category will be similar. And so in that context, it's smart to try to introduce products that really meet or hopefully build consumer demand and interest, but at the same time can help operators, franchisees improve their profitability. So I like the idea. Excited to taste it. Let's see what they come up with and how it works, how it functions.
Jim, is McDonald's still the nugget king? And if not, who is taking share or taking their lunch?
No comment. I think that McDonald's innovated in the chicken category, and whether they're the king in nuggets or whether they're, bringing a consumer in. They had, the launch of the chicken sandwich, the crispy chicken sandwich was pretty successful. So they've got lots of options. And I think that's the benefit for McDonald's right now, is keeping those options alive, so to speak, driving interest in the brand. I think we saw that most, in my opinion, with the adult Happy Meal. That wasn't necessarily a menu innovation, but it was the repackaging of similar items. But it was amazing how effective that was in keeping the consumer interested in McDonald's as an option when they dine out. And I think that's what we're hoping for any of these new menu innovations that are coming down the pipeline, in addition to the technology innovations that hopefully will make it easier for the consumer to access the brand in the U.S. as well.
Jim, thanks so much for your time this morning. Good to talk nuggets and everything else. Jim Sanderson,
there you go.
Northcoast restaurant research analyst. Thank you.
You bet. Take care.